OBS keeps crashing. Oh, by the way, I had a branding expert watch these live videos, and he said, don't do this. Started out with a countdown. Maybe I should do a countdown, but oh well. Oh well. I gotta hit the do not disturb. Okay. Okay. I didn't notice too much. I mean, there's not a whole lot of earnings this week. I don't know where Carnival Cruise Lines is. Morning, Joe. I thought we had Carnival Cruise Lines. Let me put in GM play. It's my brokerage. Let's go to core. I mean, I gotta go over to, because there's got to be something about Boeing CEO stepping down and trending. There we go. Okay. I mean, it's the stock for Boeing is soaring. Let's go to the Catalyst watch. No, let's go to the biggest movers of the day. Let's see, did it update with Boeing? Yes, it did. Okay. It still updates. By the way, I got ousted by a large amount by Chris Patel, small cap opportunity fund. It would be interesting to see what he's got in there, but as I always say, I don't think any of these portfolios are good enough to watch to pay. I'd rather pay for my newsletter or something like that. But there's my weekly stock pick. But yeah, it's interesting. Definitely interesting. Popular portfolios. I mean, Shea's the most popular, I think. And he's been having a tough time of recently, the growth portfolio. Year to date, up 4%. I mean, that's not horrible, but not growth. This guy, Austin Lieberman, 31 over year to date, 11%. Austin's got a Austin.substack.com. Let's look. Let's see what he puts out there for free. Let's do no thanks until I can see. Shit. He hasn't put anything out for a long time. So, that's new. Community, let's see. It's October 27th. Archive, November 21st. About, let's see if he does anything. I don't know. One thing about, CCL is reporting. Okay. I think we ran the 4 hour. Let's see. I got to go back. I gotta log in. Hold on. I can't see your chats sometimes in OBS. OBS, my notes and stuff block it. So, morning, Steph. Morning, Joe. Morning, John. Morning, Q-Tip. Office hours. I don't know. Is there an office hour scheduled? View channel. Hit that thumbs up button. I do have to seasonality of QQQ, because if we go to seasonality of QQQ, we're in this nice little range, like I said, and then we go to the seasonality and we go back to 2010. We are in one of the biggest weeks. That's 13 years. We can go back even further. Let's see. We'll go back to Q when the Q started. Look, I think you play TQQQ, but that's kind of what I'm talking about with the title of this episode. But let's start doing some scans. Scans. NVIDIA with a cross up and going for a move. Huh. Let's go to brokerage holdings. Anything in brokerage holdings? Snap. I'm going to do this. Snap. NVIDIA. Not as juicy. I mean, pay monthly Cobra. Dismiss. Not as juicy. Morning, Scott. See, what I notice here, you've got a nice trading range in Snap. From about there, and it definitely rejects off of that gap that it started. I mean, it bopped up there, but it definitely rejects off of there. That's an interesting one. We'll have to post this, so I'm going to do a Snap. Interesting. Brokerage holdings. Let's do Bitcoin and crypto. Nothing in Bitcoin and crypto. We did the core. We're going to do covered calls. QYLD. You know what? I'm not even going to include those. Those are kind of boring to me. And if you want to scan them, buy TrendSpider. It's kind of the way I look at it. Arch, which is coal, which is kind of in that trading range, but still high. Energy, levered ETFs. Morning, Tyler. USD. Long coin. And NVDL. That's getting set to pop again. I mean, look at that. If we look at that, I mean, that's just 2 times levered on coin. Oof. 2 times daily levered, so. Oh, no. Oh, I didn't want to save it here. Oh, boy. I had a busy weekend for paid newsletter subscribers. And then yesterday, I did about 5 hours of yard work. Cleveland Cliffs is just flying. Look at that weekly chart. And look at those ranges I put in. I'll be right back. It's taking a little time. No worries. Good girls. Oh. And nothing came up. Let me just go back to core investments and make sure this is saved. Okay. Nothing in spider sectors. Let's see the watch list. This is what ELF, Sentinel, we talked about that one. CLS, Celestica, boy, that's a tough call. Morning, Q. I like this one. I said that I thought 20 was going to be support. Those Bollinger Bands haven't come in enough. Bollinger Bands here on the weekly. That kind of made you, hey, there's going to be a move. And boom. I mean, that went from 16 to 22 in a matter of like a month. That's a nice move. Okay, let's see. That's the watch list. Let me see my not owned. There's not much in the not owned. ELF, Airbnb. Airbnb is one that I don't have in the watch list. Cisco's going to come up. Win and UPS. Okay. Not much in there, to be honest. Dow. Why did this do that? Cisco. We've got. Let's do NASDAQ. And then we'll do the S&P. Dollar Tree, Texas Instruments, AEP, Marvell, CEG, I don't have, NXPI. Let me look at Marvell. That one I thought was going to go to 70 ever since their earnings. I mean, you look at a weekly on this one and higher high, higher low. I mean, ever since, what, May of last year, it's just, it did that one big week, 45% gain in 1 week. And then, boom, straight down into the October lows, straight up. And now we're seeing that pullback. My guess is that you'll get to 60 on this one. That would be right around the low here was 58. I don't think you get to 58, but that's a tough call on that one. So, Constellation Energy. This one's been ever since that low. We talked about this one kind of consolidating here through January, and then boom. I mean, that's from 118 to 178. Okay, let's go to the S&P. We've got all that stuff. And wow, there's a lot of freaking S&Ps that have been put in there. UPS texted and Danaher. We'll put that one in. Okay, so we've got all those. We're going to go to the strategy tester. And we're going to go to the 4 hour. Boom, 255. And then you can see QQQ. Wah, wah, wah. Okay. Daily Stock Pick newsletter. I was on a tear this weekend. Okay, let's see. We are going to... I don't think they put anything out on Alpha Picks this weekend. March 19th, concentration risk. I mean, 7 of their stocks, they only have like 20 stocks, have returned over 100%. That's crazy. I gotta start buying some of this stuff. Okay. We're going to start buying some of that. Let's see. We're going to start from the bottom. Okay. CEO stepping down. I probably should put this. You know what? I'm going to put this. Big news in the morning. You know what? We'll put this up here. going to take that out. Okay, let's start down here. Snowflake, a rare buying opportunity. China to block Intel AMD chips. This is a good markets business, markets insider thing. About 4 times levered ETF. Hood. Interesting play. I thought this was this got my interest. Apple, Google, Meta. Our lovely SMCI. EVs. This was a good article. I've said it before. AMZN looks like it might be one of the best. Whoa. Thanks, Ryan. Sir Ryan. And Scott, I tell you what, if you haven't watched the interview with Steve, I had a branding expert watch. I had a branding expert. I want to see. There we go. Okay. I had a branding expert watch the Steve interview, and dude said, if you don't buy Seeking Alpha and Alpha Picks from that one, you're out of your mind. He said it was just so clear, concise, well put together. He's not an investor, and he told me, he said, this is an interesting. This is a video I did a while ago. No thanks. Man, it's just ads after ad after ad. It's probably my ad blocker that's not allowing me to skip them either. Yeah, thanks, Scott. I appreciate that. I mean, I'm getting some positive feedback on it. Is it just going to go into another ad and never play? No, it's not. So we can look at. There we go. Okay. It's an oldie but a goodie. And we're going to go to the biggest stock mover of the day. Yeah, Mark, that one, that in particular makes me want to, and I said this, I want to buy AMPH. That, I mean, he was just gung-ho on that one. Let's see, I'm going to take this. I'm going to take that out and put this down here. I mean, it captivated me for an hour, and I had to rewatch it and edit it. So I sat there and watched it for another hour, and I said, yeah, this is, as I was editing, I said, this is good. This is quality. If I were, if I were a subscriber, that would be one that I would definitely want to watch. Okay. The Catalyst Watch is the email that I look at every time. Let's go to youtube.com/@dailystockpick. Oh, there we go. Home. There we go. if anybody wants it, they can go to the incredibly intimidating. I'm just a dude on the internet who got lucky with. There we go. Steve is great. Yeah, AMPH. I mean, there were a couple. I mean, it made me want to buy everything that he mentioned. How does this look? Boy, that's a lot of notes. I gotta cut that down. Show less. Okay. We're gonna go over here. We're gonna do the Qs. Yeah, and I didn't want to release it. Here's the thing. I didn't want to release that during the week because nobody seems to listen. So if I do 2 a day, people listen to half of it. And then the actual listens weren't great, but I thought that was perfect for a Saturday. I think people really enjoyed it. I know. Let me see. Sorry, I'm distracted. Shiny things. Boom, boom, boom. Okay. Hold on one second. Do you want to go in here? Okay. There we go. Why does Penny go in and you're reluctant? Okay. You both are happy. Q, he didn't say specifically about Bitcoin, but I think he's probably and I don't want to speak for Steve, but I don't know, as fundamental as he is, and remember he's the quant guy. And so when you look at the quant in Seeking Alpha, that's his baby. I mean, that came from Crest Capital, his hedge fund. So the quant it's been back tested. I mean, everything is quality. Based on the picks that I see in Alpha Picks, I would not assume that Bitcoin would fit into his fundamental practice. It's too volatile. Remember, it's more about buy and hold. I want to see if Michael Dell actually sold more. Oh, wow. There's a lot of inside sales. How's Dell doing against all of these insider sales? It's holding up. It's really holding up. It's really holding up. Wow. That's amazing to me. Let me see. Stocks. I put in stocks for the week that I'm looking at. AMPH is one of them for paid newsletter subscribers. I did a kind of on Saturday. I sat there for an hour and I said, okay, here's how I look at things for the week and what I want to do. And then I put them in my notes. And actually, I go over one of them. I mean, GM I'm going to go over, but Dell. Crazy insider selling and it's holding up. Let me see if there's any news on here. Nothing huge on the insider buys. Resolute, that's a big buy. AMR, Dell, I mean, it's still Dell. Those are still the big ones. Oil's up over 80, natural gas down, of course. I don't know when natural gas actually gets a buy, but we'll go over stuff. Okay. Hold on one second. The dogs may bark. We're on a shortened trash week, I should say. Morning, Brandon. The hair may get shaved here very soon, by the way. One of the branding expert dude that I told you about, he mentioned that the hair makes me look younger and more more presentable. But understand that he's an old friend, and he calls me an old fart because I don't know if I've ever mentioned this, but I was a 21-year-old freshman when I went to college. So pretty much every fraternity house had said, yeah, we want you. And I just liked this bunch of guys that I was, more than Mike, that I became friendly with. And we're still all buddies, so I had him look at it for me. And they are younger, 4 or 5 years younger than I am. Because they all started maybe 3 years younger. They started college right out of high school. I was the degenerate of the group. Oxy. I almost got rid of Oxy. I still hold Oxy. I still hold Devon. I still hold MPLX. And I said when Devon was on this run that I was taking it out of the core portfolio, but I thought it could, I was holding on to it personally. I just didn't like, we're at 48 and it's turning over a little bit. That MACD is high. I think I'm still down on it, but not down that much. Let me see. I'll blonde it up just because I told my girlfriend I feel like a superhero. I feel like when I'm just with the brown/red hair, nobody wants to talk to me. But when I got blonde hair, it's called peacocking. I got to peacock this mofo. Let me see. I was looking at Devon. Devon, I am still down 2% overall. It's not a huge position. Yeah, but Brandon, I think my mom was around your age when she went to Princeton too. I tell you what, Brandon, you have all my respect because I know from 18 to 21 how much fundamental learning I needed to do in order to get back into school. So while I had the life experience and things of that sort, and I was better able to judge my time and I valued the education more than I did at 18. But good God. It was just, so you have all the respect in the world. Morning, Pavin. AMZN is no joke. I mean, if they get that, if they get this, oh, we don't want that. If they get this GLP-1 weight loss drug on target, it's a 1 month shot. I mean, this article here, Steph, I'll point it out to you since you're in. It's in the newsletter, and I'm pretty sure you subscribe to the newsletter. But this is no joke. And I should look up Cleveland Cliffs. Hold on. We're going to go to Seeking Alpha because it is moving. And I probably, since it's in the core portfolio. That's probably a good one. We're going to put this over here. Don't sleep on CLF. Okay, that goes right after China. Okay, we're gonna. Okay, hold on. Okay, hopefully dogs don't bark. Morning, Larry. Larry. Yeah, that's you, Brandon. High five, man. That's a tough one. But AMZN, I don't think it's a bad one here at all. I mean, 272, you got a 270, Steph. That's a great buy. I mean, look at how low that MACD is, and the RSI was down there. I should have had an eye on this one. The only problem you're going to have, and I don't think it's a problem, because if we look at this trend, again, you want to identify the trend. Go back to 2019. You had all of these higher lows. I mean, if that's the trend line of the lows, that's perfectly fine to me. If you're looking at it from this point, you're really looking at probably something like this. And so if that's the takeoff right there, I think you're fine. The Trump store. So AMZN, I like the play. I really do. I wish I was more into biopharma and GLP-1. I haven't bought Lilly. I should just buy Lilly. I should buy AMZN. I should buy AMP Health, AMPH. They find that kind of stuff all over the place. Okay. We're going to remove this. That didn't mean much because it's in the past. Okay. I'm going to start the podcast now. Good morning. It is Monday, March 25th, and we're looking at mixed, kind of open. There's a couple of news stories that are pretty important. First is about the EU with Apple, Google, and Meta. Second is about China with the chips. Third is about Boeing. There's a lot of news in the story, but I think the biggest news is that I released the Steve Kress interview from Seeking Alpha. Interview's getting a lot of positive feedback. It's one of the top performing videos on my YouTube channel, so go and check it out. I will include it in the newsletter as well. Even if you're not a Seeking Alpha subscriber, I would suggest going and watching it. I had a brand expert look at my channel this weekend to try and give me some tips. He's an old friend, so but he even said, hey, he's not an investor. He goes, wow. He goes, that was just rock solid. Got me excited about looking at stocks and looking at my investments and making sure that I'm invested. And the quant rating, he wanted to know more about the quant rating, so I explained that. So go and watch that video. Again, even if you're not a Seeking Alpha member, remember there's two ways of investing or looking at stocks. There's the fundamental, which is the quant in Seeking Alpha. That is the fundamental part. They look at earnings, they look at momentum, they look at some of the other things that go into the actual stock, some of the analyst recommendations, things of that sort. That's fundamental investing. Then there's what we do in TrendSpider, which is what's called technical trading. This takes all of that crap, throws it out, and just looks at the chart. So there's no emotion in this. There's no opinion in this. There's nothing other than the chart. And what we do in technical trading is we try and look at moving averages. And I'll do a little, give you some explanation on moving averages from TrendSpider. There's some educational content in the newsletter this week. From moving averages, we look at the MACD, which for long-term listeners know that my algorithm is based on the MACD. Go and do research about the MACD. I use RSI a lot, which is the relative strength index, which indicates how many buyers are showing up versus how many sellers are showing up. I also use Bollinger Bands. There's a lot that I use. I use volume. There's a lot of things. But what you see in the chart is 100% emotion out. And if you want to take emotion out of your trading, TrendSpider's the way to do it. And my algorithm, the 4-hour algorithm, absolutely provides you a tool to take emotion out of the trade. So if you see something like QQQ, very simple, very easy ETF in my mind, buy and hold. But you want to know, should I buy it now or should I wait for the 5% pullback that will at some point happen here in the Qs? Well, in my mind, I think you use the algorithm to find your entry. Where was the entry? 448.88. It's trading at 446. Are you good buying here? In my mind, you've got confirmation. I think you're good. Oh my God, it's scary to buy at all-time highs. Well, every high that you see here was an all-time high. Where would you wait to actually buy? The chart tells you when there's confirmation, you can buy. Even if you bought here at 392 and then you lost and it went down to 386, this is a long-term buying ETF. So all you do is look at and if you wanted to trade it, then trade it on the algorithm. Buy it here at 353. You didn't time it down at 345. Buy it here at 353. My algorithm over 2 years on QQQ, you have 23 positions. So not even once a month. And it makes you 28.5% versus an asset performance, which means 2 years ago, if you bought and you held it, you're up 25%. So an extra 3%. TQQQ does the exact kind of thing, but it's levered a little bit, but I don't suggest. We'll go over some of the seasonality here and stuff. But I did want to bring up that Steve interview. I wanted to bring up the differences between technical trading and fundamental trading. Fundamental, if you go to Seeking Alpha, let's go over here. We'll go to Seeking Alpha, and we'll just look. That's the offer. You get $50 off. Let's just open up a new one. Let's open up a new, and we'll go to Seeking Alpha. Because what I want to show you is really how Seeking Alpha works and how they use fundamentals to identify stocks. Alpha Picks is their specific fundamental platform. Alpha Picks is beating, let's see, it is now at 133% over the same time period that the S&P made 36%. So that's how they use it. They use the quant. And if we go over here, we look at my number one portfolio, it's Apple. And the valuation, you can look at the quant, it says hold. It goes into these factor grades. And so Steve goes over in the interview all of these factor grades, and he even releases to us some of the weighting of these factor grades because they are not all created equal. It's not these 5 factor grades. It's not like they are all looking at, oh my God, we're putting them all in equal. No, they're not. They're not. The valuation on Apple is an F, and he specifically points out the PEG, and the PEG is a D and a D+. So maybe you don't want to invest in Apple. Maybe you want to use my 4-hour algorithm to look at Apple. We'll go and look at that. But I wanted to point out seeking alpha is fundamental. And here in TrendSpider, it is technical. And here in Apple, my algorithm makes you 20% versus buying and holding last year. If you bought this 2 years ago, you're only up 0.4%. In my algorithm, you're up 20%. So it does provide you some level of protection, even if you were to lose on a stock because it was in a bearish trend for the last 2 years. Then, for instance, my algorithm would most likely lose you less. So that's the difference. Those are the 2 tools that I really talk about on this podcast, but we'll talk a little bit about other stuff. One of the other reasons I love Seeking Alpha, they give you great content. And we can look at here. This is the SPY ETF. SPY is in a buy in the quant. Seeking Alpha analysts have it as a hold, but the quant says buy. But this is the Friday email that comes out. And if you're going to bookmark one email a week to actually read, it's the Catalyst Watch. And it goes over by day. So today we have options trading volume is elevated on SPAC player DWAC ahead of potential public listing of Trump Media. So that's going to be huge. Earnings watch. We have WPRT, wet sport fuel. I know nothing about it. Casino and online sports betting will be on the watch with Nevada Gaming Board report for the month of February due out this week. All day, Parks, PRKS, will hold an extraordinary shareholders meeting to vote on a buyback proposal and amendment. Tuesday, we have earnings watch, McCormick and GameStop. GameStop, obviously, Ryan Cohen is going to release like one line about how they have future performance, blah, 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 blah. They're not making money, whatever. All day, General Motors, Ford, Adient, Lear, and Borg Warner scheduled to participate in Bank of America. We'll talk about GM because I do think that's an interesting play. On Tuesday, Adobe will speak at the conference. General Motors and Delta, Ed Bastian will also be speakers. This is just a great look at each day what could go on and what catalyst could be move a stock. So if you're looking to trade, this is a great email, fantastic email. Again, part of Seeking Alpha's subscription. Now, the big news of the day: Boeing announced the CEO is stepping down. He's quitting at the end of the year. I have no idea why he's quitting at the end of the year and not now. Just the announcement that this dude is quitting, 3.89% boost in the stock. You can see we're in a bullish trend. Into the Steve interview, we go over Boeing. Understand most of what Steve talks about with the quant and everything, even alpha picks, it's all long-term investing. So something like Boeing, which provides this nice little range between 176 and 220, and you could be going up there. You're going to have some resistance along the way. Maybe here at 199, you'll have some resistance at the 200-day at about 215. You'll have resistance. You'll have resistance at the 50-day, which is right now at 196. It's right now trading at 196. It's right at that 50-day. So if the 50-day starts to move positive, again, this is a behemoth of a company. 50% of their stuff is in the consumer stuff, but 50% is in defense. So, read the article. I think it's a good move by the board. I think it's a, long time coming. I don't think that Dave Calhoun in particular did anything bad. I just don't think he was able to change the culture, and the culture is the problem. And when you look at the fundamentals of Boeing, Steve goes over in that interview, it doesn't hold well for a buy and hold strategy. It holds well for a trading strategy because remember, Steve's quant is more about buy and hold, less about let's look at trading. It does provide some pops and it provides some catalysts, but it doesn't provide oh my God, this is a stock to absolutely sell. This is an absolute buy, blah, blah, blah. It's more about, hey, for a long-term holding, you may want to look at this. And when it changes from a strong buy down to a hold, you may want to look at trimming stuff like that. So that's how you use Seeking Alpha. Biggest movers of the day. We talked about DWAC. Surged 8% after shareholders voted to approve the bank charge. I would not invest in this until we get some type of clear direction about fundamental earnings and things of that sort. This to me is a no-brainer as far as a trade, not a hold. DWAC is not a buy and hold strategy. It could provide you a nice Tesla like 3,000% increase. But in my mind, I think there's more likelihood of this one having seen a huge volatility spike. We can look at DWAC, by the way, if you just want to look at it real quick. It's provided you a great trade opportunity. Look at that. When Trump got the nomination, you went from 1914. Now, my algorithm, here's the killer. My algorithm, 4-hour algorithm, makes you 2.8%. That doesn't sound like much with a stock that's had this much volatility. But if you bought this 2 years ago, you lost 45%. We can look at the long term of this one. You've lost 45% if you bought this 2 years ago. Now, in November 2021, when when DWAC was really came out of a SPAC, you can see it right there trading at about $10 on. That's a SPAC, clear SPAC. They've just gotten back up there. If you bought this 2 years ago, let's see, 2 years ago would have been back here in May 2020. Yeah, right here. You can see. 82. So understand, this is a trade. This is not a hold. This doesn't mean that this is coming back to all-time highs because the fundamentals just don't point towards that. Aurora Cannabis rose more than 6% following the company's agreement with investors to sell claims. Forge Holdings, Massimo. We talked about Boeing. We talked about Vista Outdoor, raised its bid to acquire the company. Biggest losers, Outlook Therapeutics, declined 4%. That's a great email every week as well. Now, I want to talk about the Qs because you can see right here, the upcoming week has the single highest win rate over the last 2 decades, 20 years. Green, 78% of the time. I got an email from or a post on Reddit about how one of our group members is posting the seasonality from TrendSpider on Wall Street bets, and people are going nuts. I need to start posting seasonality so I can sell more TrendSpiders. But here's Qs. The Qs, in my mind, you're still in this trading range. You've bounced off this 450. You're opening up right now at 443. 443 is down what? 1%, 0.62%. So yeah, you're down 443. I would expect this week to be up. You want to know why I would expect this week to be up? Let's go take a look at the seasonality. Let's look at the weeks of the year. In my mind, while you're down here, buy TQQQ. Again, this isn't a bet. Don't YOLO your crap into this. Do not YOLO. But look, 70% of the time you're up. And you're mean, let's see, on Qs, 1.26. You triple lever that, you're up 3% for the week. That's not bad. For the week, if you were to tell me that I could put, $500 on red in roulette, and I could win 3%. I could win 3%, and it's a 70% win rate. I'm in that. I'm in that for 1 week. 1 week, yeah. I'm all in on that one. So, understand this week is a strong week. I would probably play it with TQQQ. QQQ, you did have a buy-in here at 448. You're still in the 4-hour algorithm. Now, if we look at TQQQ, what I really want to point out is TQQ had this nice buy-in here at 63. Did you buy it at 63? Listen, if you bought it at 63, you were buying it into strength on a Friday? On a Friday? Well, maybe that was Thursday. Yeah, that was Thursday. So, bought it on a Thursday afternoon? Hell no, I'm not buying that on a Thursday afternoon. Let's look at a different algorithm, the 65-minute algorithm. Now, the 65-minute algorithm on this one makes you 39%. That's horrible compared to the 44% that you could have made. But here's what you really want to look at. It's not that you made less money. That's over 8 months, by the way. 8 months, you've made 39%. Sign me up. Sign me up for this one. This is a 65-minute algorithm. And the reason it's 65 minutes is because when you divide the trading day into 65 minutes, it's 7 exact candles. And so here you got a buy-in here at 62.47, and you win. Your average win is 3%. You win 31% of the time. Not a bad trade in my mind. I mean, wait for this one on the 65-minute to get you back. I'd say it probably gets you out here very soon, maybe on the next candle. Wait for the next one. Look at the MACD here, super high. I mean, just wait for it. But if you want to get in today and you want to trade this one, in my mind, I think that's a decent trade. I don't think that's bad at all, in my mind. Again, based on the seasonality. The seasonality looks good. This is a video that I did 1 year ago, and it shows you how to use TrendSpider's market scanner and algorithm to find best trading opportunities. Nothing's changed in that year. This is still what I do. So if you want to watch this one, again, it's an older one that I have. It's not hard. I use the algorithm to do it. Algorithm. I love what you do, Gary. This is Mike. Number 1 position in daily podcast rotation. Thanks for everything. This is from a year ago, and nothing's changed. This is still the same process that I use. I use the scanner that I built to find trading opportunities. And if you want this scanner, go over here, TrendSpider. It's the number 1 on the link tree, linktr.ee/daily stock pick. You can see it down below. And what you get when you go there is you get this pricing. It's $892. Now, understand, you have to have a large enough portfolio that you're trading in or managing in order to justify that $892. If you have a $5,000 account or a $1,000 account, $892 makes no sense. The thing I would tell you to do is go and get a free trading platform. And if the free trading platform that I like, Webull has a great one. Go sign up for Webull right here. It's the 4th line. Sign up for Webull, you get free stocks. Just put $1,000 in there. I'm telling you, I love that app. And you can use the charts. Understand that you will need to download the desktop software to get a lot more information. But I do like their desktop software. It's one of the best that's free. If you have Fidelity has Active Trader Pro. Go and download Active Trader Pro. That's a great one as well. Learn. You don't need to pay for TrendSpider, but I do suggest if you have a large enough account, then subscribe to TrendSpider. Me, since I'm a trader and I do trading and I manage portfolios, I get to write this off of my taxes. Taxes are coming up, so it's a write-off, just like Kramer says. It's a write-off. But yeah, if you want to see how I scan stuff, this shows you everything that I do. Another interesting YouTube video that I will put in here is this one from TrendSpider. The only moving average video day traders need. This is it. This is a great video. 9 minutes. It's freaking 9 minutes. 9 minutes of your time to understand moving averages, to find out different strategies on moving averages. This is fantastic. And it's just a masterclass on how to do stuff. One thing that I did get, and I don't have it up here, but I'll put it in the newsletter, is the top tech and communication stocks' latest quant strong buy ratings. There's Atlassian, there's Dell, there's Logitech. We'll go over Dell in a little bit. There's AMD, there's Monday, there's Zoom, and there's Arista Networks. That's an interesting, I get that email, and I use the app every morning, and I look at this, and it updates it all the time. I've mentioned AMZN before. AMZN has a new drug that's still in trials, so it hasn't been released. But it could be a game changer when it comes to boosting this stock. Now, if we go over here and we look at AMZN, again, this is using fundamentals with the technicals. Here you see on the 4-hour, AMZN has a buy-in here at 272. This should be on our watch list, by the way. I need to make sure it's on our watch list. Let me see. If you subscribe to TrendSpider, you get this watch list as well. I need to put it on the watch list. But this is one that, in comparison, we want to look at this one versus Eli Lilly, because Eli Lilly has a drug that's already out there. But Eli Lilly has taken off. If you look at Eli Lilly, it's got a quant rating of hold, and it's because of the valuation. Now, Steve's biggest thing is the gap. And the forward gap is a C+. It's actually trading under the sector. So if we go to charting and we go to Eli Lilly, and we do a comparison of AMZN. I'm going to select symbols. We'll just do AMZN. Both of these, I think they may have a dividend too. We're going to get rid of the S&P. We're going to update chart. And this is how you use Seeking Alpha. And we're going to go to performance. We're going to do total price instead of price return. We're going to update the chart. And there we go. Over 1 year, you can see Eli Lilly has, what, 6 times? 6 times? 7 times? Almost 7 times what AMZN has done. And that's because they have the drug approved. Look, when this thing started to take off in 2023, that's when it really started to take off. If we look at the 3-year metric, Eli Lilly is just so far ahead of AMZN. If we look at 1 month, AMZN is down more. Again, it's separating from Eli Lilly. Now, AMZN is up more, this week, and it's because their trials are starting to do. Now, if we look at AMZN let's just go up here, AMZN, and we look at the summary and we look at the quant rating's a buy, and the revisions are a C-. If we go to their PEG, which is what Steve says, they're actually trading above what the sector median has. So do you want Eli Lilly, which is trading below? Do you want AMZN, which is trading above? That's up to you. I do think that AMZN provides probably a decent opportunity. Read this article in my newsletter. Get the link. EV stocks, I mean, just they're getting killed. If you didn't hear about it, BYD released a new low-cost vehicle in China. It's the equivalent of $10,000 here in the U.S. And BYD and other Chinese manufacturers may be starting their plants in Mexico. And so what will happen is they will export that entire car from China that costs $10,000, may cost $2,000 to actually ship, and then they'll import it into America, which avoids the tariffs. So as they avoid the tariffs, they basically get to import these cars, these EVs, these low-cost EVs, for $10,000. Well, guess what that's going to do to the $20,000, $30,000 gas vehicle that needs maintenance, that needs gas, that you can't charge at home, blah, blah, blah. Well, that second car in your family probably will be a Chinese EV. And Elon Musk even said it earlier this year, is that Chinese manufacturers will basically own and destroy the American car makers if they don't get on the ball and do more low-cost EVs. So that's his thought, his words, not mine. Our favorite Super Micro got initiated with an overweight rating at JP Morgan. It's up 1.27%. This one's putting in, if I've never seen it, it's putting in a nice kind of, okay, let's see where the Bollinger Bands go. You can see the Bollinger Band cinched up there. We came down. We're kind of positioning ourselves here. The MACD, well low. You've gotten out. MACD hasn't gotten you back in. Probably will get you back in. I will start adding to this very soon. NVIDIA is down 0.77. Again, if you go and watch the Steve video, he goes over SMCI, how their ratings are it's just getting started. He says these guys have all the momentum in the world. It is an alpha pick. It is one of the winners. I do think that this one is a good one to continue. One that, a news story that's getting a lot of attention is Apple, Google, and Meta face EU probe for potential violations under Digital Markets Act. This is basically the Apple Play Store, the Google Play Store, and Meta not letting competitors in, blah, blah, blah. Same old story. Will they do anything? I don't know. I mean, it's more about headlines at this point than anything. I mean, we can look at Apple. Apple stock at 169. It's down 1.47. Apple's got all the headwinds of, oh my God, there's a potential breakdown coming. Google under 150. I think that's fine. Again, I think when these guys start to launch AI, I think we'll be fine. Meta almost under 500. I do think even with all of these news stories, all of these are absolute buys. Just go and read the article. I think it's an absolute buy. Interesting, looking for cheap stocks that haven't gone away. Institutional buying on the rise, extremely bullish. All you have to do is wait. Robinhood. I'm not a huge Robinhood fan. And I'm not a huge Robinhood fan. Ironically, on the week that GameStop is reporting earnings, these guys actually manipulated the market. That's why I'm not a fan of theirs as far as a brokerage. Now, as far as a stock, trading this one's a different story. I haven't traded it. My 4-hour algorithm makes you 78% versus buying and holding makes you 42%. 27 positions over 24 months. Your average win, 17%. Now, here's what I want you to look at. And this is what I look at. When I go here and I see, oh my God, the algorithm got you in at February 7th. And today, you're up 72% in this. 72% over 46 days. 46 days. Now, you had earnings, which popped you up. And yes, earnings were really, really good, and this has continued in that direction. But if you're up 72% in my algorithm with the MACD this high, with the RSI this high, at this point, there needs to be fundamentals that point to this position. And it needs to be fundamentals that provide you a great look. Look at this forward gap. It's an F23. The sector median is 1.53. Now, if we go to the summary, you can see even Wall Street has it as a hold. Wall Street has their average price target at $15.88. That's 14% down. Now, there's only 16 analysts that cover this. 9 of them have it as a hold. There is no reason for me to think that this is a great, great stock. Now, it's ranked number 2 in investment stocks, and number 1 is Stifel. If you wanted to trade in something, Stifel in this particular category, I think Stifel would be the better one if we look at SF. Now, I don't know anything about this chart. I don't know anything about this company. It's not a recommendation. This is literally just what I found. But 73, 74, you're at 76. If we go and we look at this weekly chart, you're in an upward trend. Yes, you have your MACD super high. Yes, you have your RSI higher, but their fundamentals support it. So I think it's interesting, an interesting play. I do think that when you look at the weekly chart of Robinhood, yes, you haven't come back. In fact, I don't think I looked at the weekly chart of Robinhood. If we go back here and we look at the weekly chart of Robinhood, it has not come back. But with that 73%, I'm just looking. I don't know that this one necessarily justifies it, but your 50-day has moved positive. Your 21, your 9-day are moving positive. We don't have enough information for a 200-day because it just IPO'd back in 2021. So there is a 4 times levered ETF, and it's on SPY. It's the S&P. It is quadruple X, and I need to put this, and this is just a reminder, I need to put this in the levered ETF trade so that if we look at the 4-hour algorithm here, this is what's crazy. It's 108 days old. So my algorithm only goes back 108 days. But if you just bought this 108 days ago, you're up 57%. 57%. My algorithm only makes you 25%. But with a quadruple levered ETF, this is one you want to trade on like the 65-minute, not on something like a 4-hour. You're just getting lucky. Yes, you identified a super bullish trend, but here on the 65-minute, it got you out. 65-minute makes you 37% versus just buying and holding again over 108 days makes you 57.5%. But I wanted to bring this up because it was interesting to me. There is an article here that I'm going to include about it. Risk on can now get 4 times the return of the S&P. There's a key point in this. And the key point is this is not an ETF. Yeah, it's an ETN. And let me see, where is the quote? The quote, I put it in my notes, and I'm going to put it in here. Importantly, the 4 times levered, here it is. The 4 times levered S&P fund is not an ETF. It's an ETN. The major difference is that ETNs carry credit risk and can shut down if the counterparty to the fund decides they no longer want exposure to the fund. That's exactly what happened in 2018 when 2 popular short volatility ETFs imploded and wiped out billions of dollars in a matter of minutes. So this is not one to buy and hold. This is an ETN, not an ETF. Do not buy and hold this. Do your research. Understand what you're buying. This one could blow up in your face. Other major news story of the day is AMD and Intel. Intel's getting killed. It is now down at $40.80. Let's look at Intel. This one, I had hopes and I put it in on those earnings that it was going to, pop up. It's at $41. I've said this one many, many times that at $40, I mean, look at this, the 65-minute algorithm makes you 26%, same as buying and holding. So you might as well trade the buy and hold, the algorithm just to make sure that you're protected, because again, the algorithm takes it out. Now, my algorithm in the 4-hour loses you 11%, but you lose 16% if you just bought and held this one for 2 years. We can look at the weekly. I mean, it's starting to break down again. You can see clearly that 200-day at 44 is providing significant resistance again. It provided resistance back here in 2022, back in March of 22, and January of 2022. It provided support back here in October, where it kind of traded a little sideways in 2021. But it's just lost its way. The 200 is moving negative. Now, I do want to point out the 50-day is moving positive. The only thing that's negative, the MACD down there, the RSI down here, and you're moving negative. So if you're looking to get into this one, I'd probably wait until the 4-hour kind of gives you a little bit better, but trade it on the 65-minute because that one seems to actually work. AMD. On the other hand, this one is down 1.75%. I own this one. It got you out with a 1% gain here on March 15th, and it hasn't gotten you back in. Now, my algorithm makes you 13% versus buying and holding provides you a 50% return on this one. Personally, I buy and hold. I don't trade this one on the 4-hour. I buy and hold. So when it tells me to get in and this MACD is down below here, I just buy more. And AMD and the chip stocks typically, that's the way I'm playing them. Don't fall asleep on Cleveland Cliffs. They just got an award for decarbonization projects. And this one is up almost 3%. It's part of the core portfolio. That's why I wanted to include it. I said, hey, wait until it gets under 20. It got under 20. And you had your chance to buy it under 20. Algorithm got you in at $20.97. Today, you're trading at $21.99, almost 22. The MACD is still down low. RSI is a little bit high. You have your earnings coming up later in April. Don't fall asleep on it. Snowflake. We've gone over Snowflake. This is an analysis of Snowflake that says don't fall asleep on it. It's a rare opportunity to get in on this one. Snowflake stock, as far as I'm concerned, we'll look at it. 165. I added more as we dipped under 160. I have not been going all in. Because if you look at this weekly, we're just in the middle of this range. Could you get back down here to 126? Absolutely. You've got a new CEO. You've got some new strategy going in place. You've got Palantir and other people taking some of their the business. Again, I'm not 100% sure of this one. If we go and we look at Snowflake in the fundamental portion of Seeking Alpha, you can see the, I think it's a hold if I'm not mistaken. This guy has a strong buy. Other people have it as sell. If we look at this one, yeah, it's a hold. And it's the valuation. The valuation is what's killing it. Now, the forward gap, it's trading at a 5. I mean, the sector median is 1.96 if we look at that one. Now, Wall Street has it as a buy. But again, Steve's point, and Scott pointed it out, is that Wall Street, take Wall Street with a grain of salt. I mean, these efforts don't beat the S&P. Go and take a look at tip ranks and see how many of these analysts actually lose against the S&P with their price targets and their analysis. They lose. Average price target on this one, 206, up 29%. It's because people were chasing it here. They were chasing that $229 value. And then earnings came out, the CEO steps down, and boom, you're at 158. I do think this one's a buy. I've been buying this in my Roth, and I've been just holding it. Now, when it gets up here to 200, I trim it a little bit. Do I sell it? No, I trim it. I try and get my average price target down here, and I take some profits when it gets up there. That's my thought process in trading this one. GM. For paid newsletter subscribers, you can go over to the paid newsletter and you can look at this Zoom meeting, which was, I think, paid right here. Zoom meeting replay for paid subscribers. I basically go over why I think GM actually is an interesting buy. And we looked at it here, And then if you look at the weekly, and this was where GM came into play, is GM is up 1.93% today, but it seems to be holding this 200-day. And this is a weekly. So again, if you break this 200-day and you hold it this week, I think you may get up here to 47 or 48. You may get up to 47 or 48 this week. Now, my algorithm makes you 17% versus the actual stock over 2 years loses you 2.9. Algorithm got you in at $40.89. You can see right there that $43 line that I put in. Now, the RSI quickly moved up. So if you want to find an entry on this one, maybe the 65-minute provides you an entry. You go back here and look at the 65-minute, you make the same as buying holding. Now, the 65-minute got you in it here at 43.11 on the closing candle of Friday. You can get in here. It opened up at 43.06, so you had your chance. Right now, you're at 43.79. Maybe you want to buy this one. Now, the MACD is a little bit high for me. RSI a little bit high. I might want to wait for this one to come down a little bit. But GM provides a trading opportunity in my mind. Dell. I think Dell, when you go over to FinViz and you look up Dell, I mean, this is what I wanted to show you, is how much insider selling is actually going on in Dell. Take a look down here, and you can see from March 6th, I mean, just March 6th, you can even go back to March 4th. Look at the dollar amounts here. I mean, you're talking 90 million, 100 million. You're talking about $700 million, $800 million, 142, 127, 77, 60 million. And then look at all of these that Michael Dell sold $211 million of stock just in one day on March 20th. Now, if we go and we look at this stock, this hasn't moved the stock too much down. So in my mind, this provides you an opportunity. You're seeing the Bollinger Band cinch up here. You're seeing that you have a confirmation over this. When that insider selling actually stops, which it might stop doing now, this might provide you an opportunity. For me, I'm going to add this to the watch list here. It's in our watch list in TrendSpider. So I will get an alert when Dell is a buy in the 4-hour algorithm. Now, 4-hour algorithm over 2 years makes you 134%. Buying and holding makes you 111%. I thought that was an interesting one. AMPH. If you watch and this again goes back to the preparation that I did on Saturday in that Zoom meeting. AMPH. This is one of AlphaPick's losers, and Steve goes over why he doesn't understand that it's a loser. And it's a loser since I think they recently put it in. Let's see, where is AlphaPicks? Let's go over to AlphaPicks. We'll go to the portfolio and we'll look at AMPH. And this is what's great is you get all of this stuff and you can go and look at it. AMPH right here, they added it 7/3/2023. So they added it on 7/23. And if we go back to 7/23, that was around this period at all-time highs. So you can see, let's see, what does it say? It is down 25% since they recommended it. It went in this complete reversal. So 7/23, you can see right there, and we're looking down here at 30%. When does it get a bid? Well, look at that MACD. It's low. Look at the RSI. And again, this is on a weekly. If we go and we look at the 4-hour and we look at this one, when does the algorithm get you in? Look at that line right there. That is exactly the line that we looked at. Now it's gaining some confirmation here at 44. This is one that I want to look to add. Again, this was part of my my Zoom meeting with the paid newsletter members. BKX. I thought this was, no, maybe it's not. Okay, I'm going to take that one out. Social request. Tyler from email. ACMR. This is ACM Research. ACMR, I don't know anything about it. You can see hype after its earnings. Let's take a look at it. It's got a gap down here. Algorithm gets you in at $30.19. You're at 31. Let's take ACMR. Let's take a look at this one. It's a semiconductor, $1.92 billion PE is not bad. Year to date, it's up 61%. Looks like most recent February upgrade, $39 price target, average price target $37. Let's see if there's any insider stuff. Pretty big insider sales, it looks like, here in March, 27 and 30. So right now you're trading at 31. Let's go over here to Seeking Alpha ACMR. And there it is, ACMR. Strong buy in the algorithm. In the quant. Strong buy, valuation B. Profitability is the only D+. So when you look at profitability, free cash flow, I mean, they're getting killed on free cash flow. But even that's not a horrible cash from operations. They're 75 million below. They're just below the sector median of 86 million. So I don't think this is horrible, to be honest with you. Look at this. Net income per employee, they're 788% higher. This is ranked number 1 in the semis, material, and equipment, ACMR. I think, again, you have some gain here, and it's up year to date big. The algorithm loses you 3% versus buying and holding makes you 41% in this. So I don't think the algorithm is much to look at. But in my mind, with that strong buy, if you're looking to invest in this one, Tyler, go ahead. I mean, again, Seeking Alpha, I trust. Alexotra, Barrick Gold, and Integra Resources. Barrick Gold is GOLD. I'm not a fan of gold. I mean, I think these guys are miners, but I don't like gold. I mean, I don't know what makes you think that this one's a good one. GOLD. Look at the PE. I mean, year to date, down 12%. I'm not a fan of gold. I'm just not. I mean, gold to me, buy Bitcoin. I'm in Michael Saylor's. Just buy Bitcoin. Doesn't look good. So, Integra Resources. What is Integra Resources? Integra Resources. There is it. ITRG. I don't even know what they do. Again, it looks like a dying stock. I mean, it doesn't look good. Integra Resources seeking out precious metals. I'm not into precious metals. Not my thing. So, again, if you want to buy a dying stock, that just looks like a dying stock to me. Doesn't look like it's a profitability. Doesn't look like it's good at all. Adam, where do you think AMD is going after the China ban? It's going down. I mean, if I knew exactly where it was going, I'd tell you. AMD is expensive. If you go over here and you look at AMD, it is super expensive. We can compare it. It's a strong buy in the quant. Valuation is D, and probably because the PEG ratio. Yeah. Look at the forward PEG. 1.1 versus 1.96 in the sector. That's why it's a strong buy, is because he did mention, I believe he mentioned on camera. If not, I'm going to ruin it off camera. But he did mention PEG was higher weighted than most of the other valuation. And that's why you get a D here instead of a complete F, and why it's probably a strong buy in there. But AMD, in my mind, I think you buy it and hold it. It's ranked number 2 out of 65. Taiwan Semi is the number 1. And if we look at Taiwan Semi, I think that's a strong buy as well. Yeah, this is a C. The issue with Taiwan Semi, look at that. 1.05 versus sector medium, 1.96. The issue with Taiwan Semi is you have to pull up with the political risk. So, but again, Taiwan Semi, AMD, we can look at NVIDIA if we want to look at NVIDIA. This is the one that he said he wouldn't look at buying. Valuation is an F, and that's the only thing. And he said the PEG, 1.08 versus 1.9. I mean, he doesn't think that it's going to go up significantly. He says it's just run too much. So they have it as a hold. There's some issues there, probably with some of the other stuff. But valuation F. He doesn't have it as part of his alpha picks. AMD, not part of the alpha picks. But in my mind, I wait for this valuation, this 4-hour algo to get me in. Look at how deep that MACD is going. Look at that. I mean, it's down, 1.6? I don't think there's a problem with AMD. I think it's just a reaction to something the U.S. did. And so, they're banning AMD and Intel. Nobody was buying Intel over there anyway. Scans, NVIDIA. NVIDIA has another MACD cross up, and it's, up 1.45%. You're still in this from $515. Again, my 4-hour algorithm hasn't got you out on this run. 4-hour algorithm has you up here at, 81% over 76 days. Now, my 4-hour algorithm in NVIDIA makes you 322% versus buy and hold. You're up 237% over 24 months. Again, NVIDIA, I've said that I thought this was where we're going to go. We ain't going down there. You're putting in this super, super volume shelf up here between 800 and 900. I think you're just continuing higher. Snap. Snap is one that I have it in my personal portfolio. It's not part of the core portfolio, but for $11.42, that's right where you're trading right now. I think that's a good range. I think you're using this gap right here at about $12.36. If you want to get into Snap, you can get into Snap. Arch. This is coal. This is one that I wouldn't necessarily invest in, but you can trade it. 164.85. Algorithm doesn't really work on this one at all, but hey, if you're looking for something to trade, you can do that one. Now, one that kind of caught me by surprise is Coinbase. CONL. This is a 2x levered daily coin. You do not want to buy and hold this, but wow, this algorithm really does well with this. Really does well. And again, it's a bullish stock, but this is a 2x levered. Over 45 days, you're up 242%. Now, the algorithm over 19 months, because it doesn't even go back 24 months, over 19 months, 20 positions. So not even one, just about one per month, because it's 19.7 months. So about once per month. The average win is 103% on this. 103% on average. You win 30% of the time. So you don't have to win even 50% of the time. It's when it gets you in is the important point. And we've got another cross up here. So you've got another cross up. You could probably get 50% out of this one if you go soaring back. Brandon in the comments here, this is MicroStrategy. This is Bitcoin on steroids. This is a levered Bitcoin play. Understand, MicroStrategy, every time they have earnings, what they do is they borrow money as Bitcoin goes up. They borrow money against the Bitcoin assets and buy Bitcoin. It is a levered strategy. This is MSTR. So this doesn't have another cross up. Just understand, you're in this one. This one, we can look at this one. Let's just pull it to today. You are up 266% in 59 days in the algorithm. Algorithm makes you 668%. You over 24 months, you make 224%. NVDL, because we got the big boom in NVIDIA, NVDL is up. This one's up 2.97%. Algorithm got you in here at 34. Right now you're 48. Let's just look. Algorithm makes you 521% over 15 months. Buying and holding this one makes you 942%. But in my mind, it provides you safety. Safety meaning that you're not going to win 100% of the time. You're up 47%. Your average win 35%. Would I buy this here? Probably not. Am I buying NVIDIA? Probably. Again, remember, these are daily levered. You do not want to buy these ones. This one had a reverse split 6-for-1. So that was pre-announced before this huge run probably. But yeah, it was 6-for-1. ELF. ELF is one that we've gone over, which has just been historic in its actual run. Got you out here with a 32% gain, 207. New buy-in. You're trading at 203. Algorithm makes you 309%. So if you're feeling iffy about the price and you want to get some safety, take emotion out of the trade. 309% is not bad. Buying and holding makes you 717%. Your average win is 19.58%. Here's the killer. Because it's a bullish stock, you win 58% of the time. understand this one has gone hyperbolic. And that range right there was the range that I said when it was trading down here. I said, this is the range that I see. Well, where'd we go? We went right above that range. Are we looking at that range again? I'd argue that maybe on the weekly, you could even pull this one up to probably about here. And that, yes, we're at the top of the range. But 206, if they continue their growth, I don't think it's crazy. Sentinel is one that got a cross up here. And Sentinel is one that we talked about last week with their earnings and their gap down on their earnings, their bad earnings. Brad Freeman, the stock market nerd, he just started a position here. 2278 is the buy. It's trading at 2292. You're below your 200-day. The only caveat to this is that I do think that this down here at $20 provides you the ultimate support. I'm not saying that it won't go up and fill this upper gap, but I do think this gap right down here, you come down and start to fill this. You've only filled this down to, it looks like, let's see, the low here was 2182. And so if you go down to 2182, you're just starting to touch that. You don't have confirmation in this, so I'd rather wait to see you get above that 9-day so that you get confirmation. And there's a bunch more. If you want to see more, just go to the newsletter, sign up for the newsletter. And if you go over here now, that was the Saturday newsletter. But like this is a typical, let's see, recent post. I'll show you a typical free email that I put out, 3/22. This was Fridays where I announced, hey, I'm going to do Steve's interview. And then you scroll down here. You got your links for the podcast, which you're probably listening to. You got TrendSpider, all the stuff. These are my notes. So what I do is I release my notes. And as you scroll down to the end of the notes, you're going to see a scans. There's all your social requests. You're going to see a scans. These are the bullish stocks that show up in my 4-hour ETF, 4-hour algorithm. 4-hour algorithm. So it shows bullish in the 4-hour algorithm. If you want the algorithm, if you want to do the scans yourself, again, sign up for TrendSpider. I've got 3 tools that I use. And it's TrendSpider, it's Seeking Alpha Premium, and it's Alpha Picks. TrendSpider, $800. Seeking Alpha Premium, $189 with my coupon. Alpha Picks, $449 with my coupon. Alpha Picks is just a quant-based strategy. So if you want Alpha Picks, that's this one. It's 2 stocks per month. We're coming up on the first of the month. They'll release another one. They tell you when to sell. They tell you when to buy. It's 2, they basically buy. Again, the reason it's $449 is because of the performance. It's 133% versus 36% on the S&P. Even before they started this in July of 2022, they back-tested this strategy. This is a strategy that Steve has built over 30 years, and it's quant-based driven. When you go to Seeking Alpha Premium and you look at these, if we just go home here and we take a look at a stock, let's just take a look at Intel, for instance. We'll go to this one and we'll take a look at Intel because I don't think we looked at this one on Intel. It's a hold, and the reason it's a hold, valuation, growth is a D, profitability A+. They're making hand over fist. They're doing fine. Momentum, B. It's not soaring. But it's putting in that range between 40 and 50. I'm holding $25,000 worth of this in a retirement account. I could get out of it at any time. I just, for my mind, I think it's a $40 to $50 stock. I'm sitting there. I don't need the cash. I got plenty of cash. So again, this is where the $189 comes into play when you do your own research. Alpha Picks, you don't do your own research. So if you're new, I would suggest Alpha Picks for $449. The reason I would suggest Alpha Picks is if we go over here and we look at Alpha Picks, they provide you fantastic stories. And it's not just about their portfolio or their picks. It's about mitigate concentration risk with Alpha Picks. They 7 of the Alpha Picks have stocks that have returned over 100%. And they go over a story about how to mitigate risk and how to manage this Alpha Picks portfolio. And that's what they do. And they go over, they have video web conferences, Alpha Picks stock selection video webinar replay, Cruise to New Heights. That was Royal Caribbean that they suggested. And Steve goes over in the video that I posted on Facebook, on Instagram. YouTube. God, I got my social media. But the video that I posted, he goes over Royal Caribbean and why they picked it. He goes over why it's undervalued. Yeah. So Alpha Picks, fantastic. And again, you don't have to be an Alpha Picks subscriber to watch that video and understand the importance of doing your fundamental research and seeing how they do it. He shows you how they do it. He goes through it. So go and watch it. If you're interested in your own picking, then just invest in, $189. Seeking Alpha. All of these can be found here on the link tree, linktr.ee/daily stock pick. TrendSpider, you sign up for TrendSpider, then email me. Email is right over here. Email me from the email that you signed up with TrendSpider. I need to have that email because that's the way I get compensated as an affiliate. Simple as that. It's also the way you stay up to date on things that I do. You saw me updating through this thing. As I update those lists, you need to be subscribed. If you're not on my program, you won't be subscribed to that. So you won't get the updates. You'll just get my algorithm and stuff. That's it. So get Seeking Alpha Premium, Webull. Like I said, get desktop software. Webull's right there. The newsletter down here. Use my referral link for Tesla. I think I saw this weekend. You can get a new long-range Tesla Model Y for $38,000, which, hey, sounds expensive. But for those people last year who were paying $67,000 for a brand new Model Y, this is cheap. Cheap as can be. AT&T, fiber and referral. Visible, if you have a phone service and it's more than $25 a month, get Visible service. Use that code. You get $20 off your first month. And if you just check out the plans, I have the $25 a month plan. I have the lowest plan. I have not had a problem. Speeds, fantastic. Visible Plus, if you're annoyed by it, it's $45 a month. That's nothing. Come on. What are you paying for your phone service? So, again, if you have any questions, hit me up. Okay. See you tomorrow. Bye. Is SMCI shooting up? Did I miss this motherfucker? Oh. It is. Oh. Nvidia's up 2%. SMCI. What the hell came out about SMCI? Or did it just... Wow. It's just trading up there. Let's see the 65-minute on SMCI. Ho, 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 ho. 938. So if you bought at this, oh, it's a nice 15% in 4 days. Travis, fellow Vaughn. That's a tough one. I think Boeing, in my mind, this is a trade, and I've said it before, between 170, 180, and as it gained confirmation, you could get it. I put that one in there based on this long term. And you can see it bounced up. I think you have 200 in this one. I think at the top, you get 230. So Travis, I've put this one in the newsletter before. The MACD down here at 185, it made sense. I just, again, I'm sitting here and holding. I think my average purchase is about 190. So if you can get in at 191, you're sitting right where I'm at, but, don't follow anybody. I think there's a top here, and I'm just, that death cross, the 50-day hasn't moved positive. So, that's where I'm a little bit worried. There isn't fundamentally anything that Boeing did. This was just a CEO shakeup. There's nothing fundamental, and the dude ain't leaving until the end of the year. So, Travis, I hate to recommend Boeing. It is in the core portfolio. I've contemplated taking it out. The reason I don't take it out is because it's just a behemoth. So, yeah, Brandon. I mean, Brandon is probably my number one guy who can say, hey, TrendSpider changed my life. Is Matt MSTR on that 4 hour, just God. You're about to get another cross up here on MSTR on the MACD. Yeah, that's a great play, John. Nice one on that. ACMR, I'm not convinced. I don't know enough about it fundamentally to say, hey, oh my God, you've got to buy it. But with it being a super strong buy, with it having its highs at 35, here you were at, in 2011, you were at 48. Maybe it comes back to that. So, Nike. Oh, you're good, Q. You're good. You weren't the only one, by the way. I had 6 people this weekend who signed up for TrendSpider. And I emailed over to TrendSpider. I'm like, I can't find these people. And they're like, we can't find them either. Thankfully, you got back to me. The other 5 douches haven't. So if you're one of those douches that hasn't gotten back to me and I emailed and said I need... there was some shady people. And I think what they're doing, honest to God, I think what they're doing is they're asking for my 4 hour, thinking that I'm going to send them some type of like strategy spreadsheet. No, you import it into TrendSpider. It's proprietary to TrendSpider. So, I mean, I don't mind giving away stuff, but that 4 hour algo, man, come on, that's my bread and butter. It's like saying, hey, Coke, we're Pepsi. Can you give us your formula? Because we can't figure it out. Nike. Okay, Nike. Nike's broken. I mean, Nike's broken. So, I own this, and I own this. I'm a douche who bought it 122. It's $1,000. I think I bought 10 shares. So it's like $1,000 to me. It's not one that's kind of burning a hole in my pocket, but it is one that they're just broken. I mean, look, if I'm looking at a bottom, I think the 80s is your bottom. So I don't know what catalyst this one puts out there. I can't imagine anything in Nike going, there were some analysts saying, hey, my teenager wants to wear nothing but Nikes. I don't know anybody that wants to wear Nikes. And if you've got a teenager who wants to wear Nikes, sad to say, ooh, Wilfred Frost is back. I like him. I just don't know. I mean, look at Nike versus Lulu. Look at Nike versus Abercrombie. Look at Nike versus Adidas. Look at Nike versus Gap. It's a nightmare of a stock. So it's not in the core portfolio. I don't like it. You're trading at $92. That was when the world started to shut down. Back in 2020, you were trading at $92. It's a broken stock. It's just broken. So, that technology and innovation, they haven't done anything. They don't get a value for innovation. So, it's really, really bad. And look, I mean, the forward PE is 23. Why are you valuing a clothing manufacturer that's not growing at 23? Now, when we go over here to Seeking Alpha, let's see. What do they rank Nike? I bet it's like a hold. Yeah, it's just a hold. Its valuation is crazy. The PEG, they don't release it. And that was what killed them. The results look good. And then they provided crappy guidance. I mean, look at the PEG trailing. Or I'm sorry, this is forward. Forward is 26. Sector median is 16. So, sitting here looking how much information you present. Yeah. I know. Thanks, Mike. I do present a lot. Kind of why when I get that that notification about comment, your stuff's too long. You're not listening to it. You're in there for I want the text of what to buy, when to buy, and when to sell. Get alpha picks. CELH. This is one that, I mean, it's just taken over. And I think that, they've got a Pepsi deal that I think is just going to continue to print for them. Scott, I don't drink it. I don't like these drinks. I try and cut sugar as much as possible. I'm addicted to sugar. I hate that I'm addicted to it. But Celsius, in my mind, it's just one of those wastes of calories and wastes of drinks. And I know it's caffeine and energy, and I don't like it, but hey, have at it. It is a crazy good stock. I mean, look at that. Crazy good stock. It was capitulating right there. It's putting in nice stuff. And let's see, just for shits and giggles. Let's see. It's a hold. Whew. Look at the forward gap. Or forward peg. They don't release peg. PE, forward PE, 83 versus 18. Oh. Peg. Why do I always say gap? I'm tired, man. It takes a lot to do that hour. It's the valuation that kills this one on the quant. 9 out of 14. Is Monster Beverage number one? Coke. They like Coke. I still think 60 is probably the tops of Coke. Yeah, I don't know why they would rate that a strong buy. Lulu is a buy. I mean, I saw every retail analyst say those earnings were too good. I mean, Lulu, I wouldn't buy it as far as, oh my God, you've got to get into it. But Lulu under $400, that wasn't that bad. Let's look at this. Peg forward 193 versus 154. Maybe they're not growing as fast. I think it's the projections, though. That's what I think. Bombshell earnings reports. Let's see. Yeah, I don't see. What I don't know was Lulu's sandbagging. I just don't know. Whoa. That would be good. Yeah, energy drinks are, I mean, you tell me that people don't have discretionary income where they're paying like $3.50 or, the price is there. If you stop into a gas station and you buy shit, yeah, you got plenty of freaking money. Or you're just not spending wisely. I'd rather drink at the water fountain than pay, $7 for an energy drink at a gas station. Yeah, that is big, Brandon. I agree. Here's Lulu, though. 13 out of 34 in the accessory luxury. Ralph Lauren. Do they report earnings this week? Look at that stock. Poof. 1 year, 64%. When's their earnings? I think they already had them. Earnings is few and far between now until next. You got your dividend date. Okay, Ralph Lauren is a strong buy. I mean, that's soaring price. Look at how it used that. Oh. I love this, though. I mean, look at how far that's come down. And this range right here. I mean, at 182, that gap scares the F out of me, but oh well. I know. I mean, look at Abercrombie and Finch. Look at this weekly stock. Look at that. I mean, tell me when you're buying on a pullback on this weekly stock, because there hasn't been a pullback. And this is an alpha pick. That's an alpha pick. That's crazy to me. Okay. I'm out of here. I got to go do this. It's a nice day out. I spent 5 hours cutting down bamboo and wood yesterday, so I'm sore. I got to dethatch the lawn today, I think, because it's nice out. And just fuck it. Pepsi's not a bad. I mean, Pepsi's a good. I own Pepsi. I think Pepsi at 170, 178, I think. I mean, look, that weekly chart right there, I'll show you kind of the realm of it. It is putting in a nice little capitulation right here. Wait until the algorithm goes and then. No, mulch, we do pine straw down here in the South. Some people do mulch, but pine straw, it's a yearly, $500-$600 to pine straw in my house. They're supposed to come at some point. Shane called me. Who's this? Okay, I didn't have a new. Shane called me at 9:30. Okay, so this is the 4 hour, 164. I mean, this doesn't work on the 4 hour. It loses you 16% versus 5%. But look at the weekly, and I've identified this as just a buy. I mean, it's just a buy. Now, GLP-1, that's what you're seeing in this. But you're seeing that 200-day at 163. So if you buy here at 172, let's see. Because you want to use that 200-day as your support. And you can see it bounces right off of there. So say GLP-1 comes out and you buy here at 162. And you get down to that 200-day at 162. You're risking 6%. I mean, to me, risking 6%, that's nothing. Are you going to go under the 200-day? I don't think so. I mean, take a look at this long-term stock. Do you go under the 200-day other than some type of financial craziness? No. So I think that one's you're crazy if you don't get into this one long-term. Are you going to make 40% in the next year? No. But in my mind, have some exposure to it. I mean, yeah, I've got a ton of Apple. I am not exposed to a lot of other sectors other than tech. This is one to just put $10,000, $20,000 in and just sit there and go. Yeah, Q. I didn't gain money. I mean, understand, so 2022, I did not beat the S&P. And it was because the grade 8 had pulled back so much. But it's a good lesson about being exposed and staying in. Because let's look at a monthly. We'll go back monthly. Because if you look at Apple monthly, and we just look at 2022, okay? I think I was down 37% in 2022. And we go to December, and the low is 125. There you go. 31%. 31% over 11 months, say 12 months. I mean, we can move this. Yeah. How's that 11 months? Well, that's the year. So my 65% of my portfolio lost 31%. I think I was down 36%, 35% during the market crash. But, I mean, you've come back. What was that? 180. I mean, this one traded over the top of that. So am I worried? No. In a market crash, you're going to lose money. I mean, I talk about personal, it's a personal choice. I'm okay with volatility. I'm okay losing more than the S&P in a market that's down. I'm not okay with not beating the S&P in a market that is up. And that's where I'm at this year. The explanation is that, oh no, I had it, Q. I had it. It's just, understand there's tax reasons you can't do it. There's, if you manage your portfolio on a day-to-day basis, you can't manage, $3-4 million and get in and out on a daily basis. You can't. You have to buy and hold. So, you can use the algorithm. The 20% of the portfolio that I traded, I killed it. I beat the S&P. But in the the 80% that I don't actively trade, I didn't beat it. It's portfolio management. I don't know any large fund that doesn't lose money in a down market. So, yeah, I mean, shit. There's nobody that's going to, there are hedge funds that were up like 2% in 2022 when the market was down 35%. They have significant exposure to hedges. Most hedge funds were down significantly. So if professional money managers can't, there may be people like Michael Burry, who's a bear, hugely up in 2022, enormously up in 2022. But do you want to be a bear in a market? I mean, let's just look at the Qs. Let's get out of the strategy tester because let's just look at the Qs. Look at the Qs monthly. Do you want to be a bear against the Qs? I mean, 2022, you did. You made money. But, I mean, how are you going to time this? Again, tell me how you're going to time this. On the monthly, you could get out of your entire portfolio when you lost confirmation, up here at 356, but you didn't gain confirmation until 320. And are you going to feel comfortable buying back in at 320? No. None of this feels comfortable. None of it. So, my mind, just stay bullish. So, there is nothing that's going to save you from losing money in a downturn. Nothing. I lost plenty of money back here in 2008, I think I lost 40% of my portfolio back here. Back here in March of 2020, I lost 40% of my portfolio back here. I didn't have TrendSpider back here. In this market, what I'm looking for in TrendSpider is I'm looking for the opportunities to get into that bull market and protect me against this downside, not for the entire portfolio, but to try and beat the S&P. And I had TrendSpider here, but I couldn't beat the S&P. And the reason is because there's a large portion of my portfolio that I just can't trade. So, and you don't want to follow me. You want to manage your portfolio the way you do. There are people that listen to me that have gotten out of this market because they don't feel comfortable. It's all about personal choice. And that's why I say I'm never a huge fan of the text triggers, the text alerts, where they'll tell you to buy and sell. And the reason I'm not a fan of that is because you're following somebody. You're not making up your own path. You have to understand. I started investing in 1985, 1986, somewhere in that neighborhood. I didn't have a lot of tools back then. I mean, there wasn't the internet. You waited for the Wall Street Journal. You basically called your broker and they gave you advice. You paid $50 per buy, $50 per sale. There's a lot of things back here. TrendSpider didn't exist back then. TrendSpider existed here. Did I listen to it? No. I mean, my hope is that in the next downturn like this, I'll be a little bit better. But I don't know that I'll be better. The hope is that just, hey, I've got, I've got more money in the bank than I actually need, and just making sure that I'm growing that in a smart fashion. And no, it's not rude. You can ask me whatever you want, but just understand, I have significant losses in the past, but that's because of the stocks that I trade in, the growth stocks that you're gonna trade in, or that you're gonna hold. Magnificent Seven had a catch-up trade, so yeah, personal choice is what it's all about, and I am not here to guide you in or out of anything. And that's why I give you the tools, because in TrendSpider, while I built that 4-hour algorithm, I've built something that's comfortable for me. And that 4-hour algorithm is super comfortable for me. Might not be for you. You may be able to build something better. And it might be outside of TrendSpider. It might be something different. So, oh man. You do not want to be one of those dudes who lived through that in Moscow. They got beaten to a pulp. So, okay. I'm out of here. It's 10:41. I'm going to be here forever doing this. Okay. Talk to you later. Bye.